Hi, welcome to my channel. In this topic I will talk about foreign transactions, currency, conversion type, rates, cross-currency transaction, and a lot of things. It's like a concept more than practice. So let's start. First of all, when do I create or enable the currency? As you know that one of our 4Cs is the currency. You have to enable or create a currency for displaying monetary amounts, signing currency to ledgers, entering transactions, recording balances, or for any reporting purpose. All currency is or listed in International Organization for Standardization as ISO. As you know that the default currency in Oracle Cloud is set to USD as a United States dollar. What's different between precision, extended precision, and the minimum accountable unit for a currency? During define a currency or enable currency, you will find the three fields as you see: precision, extended precision, and minimum accountable. Precision, it's number of digits placed after the decimal point used in regular currency transactions. As you see here, for example, we have for USD 2 as a precision value, so the value must be 1.00. For extended precision, it's number of digits placed after the decimal point and must be greater than or equal the precision value. For example, here you put precision value 2 and here you put it the extended precision 3 or 4, so in it will be 1.1234. It's 4 or 3 more than the precision value. Minimum accountable units is the smallest denomination of currency. For example, for USD that would be 0.014 a cent. It's minimal accountable. As you see here that during define or enable the currency or manage currency, you will find precision and extended precision and minimum accountable amount. This is the managed currency, which you can find it through setup and maintenance and search by managed currency. All of us know that. And also this is managed during matching the invoices for this currency, and you want to put a precision or whatever extended precision, so from this area you can manage that, because as you know that in our supply chain during make a receipt for our PO or receipts, you can it's allow or it's always to receipt amount or quantity in decimal or in amount instead of quantity. So in that case you can find, for example, the precision numbers around 10 or 12 digits. So how to manage like these cases during matching or after matching the invoices through the precision and extended precision of your currency. Conversion type, as we know that there are a lot of conversion type. First of all is a corporate, is used to standardized rate of company. For example, if you have a rate between currency A and currency B, for example, is 3 or 4, and this is a market rate determined by, for example, senior financial manager or bank or whatever. So if it's stable during 1 month, 2 months, blah blah blah, so you can define it as a corporate in general ledger to restrict user to enter a wrong rate or whatever. Spot, its rate applies to immediate delivery of currency, that now this rate will be like this, after some time it will be changed to this, so like immediate delivery of currency rate. User that you enter a foreign currency for a transaction and you haven't defined a daily conversion rate for the foreign currency. If you select this conversion rate, you must enter the conversion rate. This is user that you give the users to enter the rate during register the transactions. So in this case, the conversion rate will be, this field will be open as a text to allow users to enter the rate immediately or during enter the transaction. There are main questions that what is the difference between spot, corporate, user, fixed rate. This is the differences. That spot when exact currency conversion is needed. Corporate for setting standard rate across your organization for a stable currency. As I told you before, 1 month, 2 months, 1 year or whatever, it's stable. User, it's like give the users the responsibility to enter the rate during make the transaction. Fixed for rates where the conversion is constant between two currencies. It's a constant. Conversion rate type are used to automatically assign rate when perform the following accounting functions: convert foreign currency journal amount to ledger, convert journal amount from source ledger to reporting or secondary, because we know that the main difference between ledger and secondary ledger that there are changes, for example, in chart of account, currency, SLA or accounting method, and the chart of account and the calendar. And in case of you need to reporting or represent your current accounting booking of your current primary ledger in a different currency, you can using reporting currency. And the third function here is that run re-evaluation or translation process, because in case of you need the current or current record accounting in a different currency, you have one option of two, either reporting currency or translation. As you see here, that enforce inverse relationship. During make define your rate or manage your rate type or whatever, there are a lot of options of this rate type. Enforce inverse relationships indicates whether to enforce the automatic calculation of inverse conversion rate when defining daily rate. When you enter a daily rate to convert currency A to P, the inverse rate of P to currency A is automatically calculated and entered in the adjacent column. If either rate is changed, the application automatically recalculates the other rate. For example, if you enter rate between A to B is 3, so the rate between B to A will be 1 divided by 3. So this is the application will be automatically the enforce regarding enforce inverse relationships which you enabled between currencies. You can update the application calculated inverse rate, but once you do, the related rate is updated. The option enforce the inverse relationship is maintained but doesn't prevent you from updating the rates. In this case also, you have the option to update the rate. If not selected, the inverse rate is calculated, but you can change the rate and update the daily rate table without corresponding rate being updated. For enable cross rates and allow cross rate override, it's to calculate conversion rate based on defined currency rate relationship. Generally, you calculate cross rates based on your defined cross rate. And allow cross rate override checkbox to permit your user to override application generated cross rate. If you accept the default of not selected, the application generated cross rate cannot be overridden. GL currency rate uploads. As you know that there are three methods to loading currency rate. First of thing, manual loading use create daily rate spreadsheet, and the manual using import and calculate daily rate FBDI, and automatic load using as a web service. During also manage or currency rate manager, there are daily rates. You can define here the rates, you can search, you can also create it in a spreadsheet to, for example, if you are going to create a corporate for a 1 month, 1 year, whatever, so you can create it in a spreadsheet. You just mention your two currencies and the rate between them. Required security for loading GL currency rates. As you know, for anything you are going to do it in Oracle Cloud, you will ask yourself what is the duties, what is the privileges, what is the rules it must be assigned to my user or to finance manager user, whatever the person, to make that. As you see here, for creating rate types or privilege, define conversion rate type. Duties is daily rate administration, general accounting manager. For maintaining daily conversion rates, maintain you just daily rate administration, the same general accounting manager. As you see here, you will find all of them the same, but here general accounting setup review, just for viewing daily conversion rate, viewing like read only. It's daily rate administration plus general accounting setup review. For these duties and the privileges, also you can take a copy and define, or whatever. You can customize the rules, depends on the segregation of duties in your company. Cross currency payment, that in payable you can make a cross currency payment. Cross currency payment during invoice creation, your setup determines the default payment currency, or you can manually select payment currency irrespective of the invoice currency. During make or create the AB invoice, you can select a different currency for the payment as a payment currency. During payment creation, the cross currency rate converts the invoice amount to the payment amount. What is cross currency rate? For example, if we have a ledger in USD and invoice in GBP and payment currency in euro. We will discuss about this example later. For example, you make a payment in euros for invoice created on pounds sterling. This table lists currency and cross currency rate. As you see here, the invoice currency GBP, payment currency euro. Cross currency rate between these two is 1.25. This table shows the conversion of the invoice amount to the payment amount using what cross currency. If the invoice amount is 100 GBP, so the invoice amount multiply or cross currency rate this one, it equal 125 euro as a payment amount. The setup, you can set up a default payment currency for supplier side on the invoicing tab of the supplier side page, and invoice business unit on the manage invoice options page. You cannot update payment currency on invoice once you save the invoice. For example, you are going to enter invoice in USD and in payment currency you put it euro. Once you saved, you cannot change this payment currency from euro to any other currency. Cross currency payments benefits. There are a lot of benefits with cross currency. Again, cross currency in case of your ledger in USD, your invoice in, for example, GBP, and your payment in Indian rupee. So this means cross currency. Manage your cross-border transaction effectively. Comply with legal regulations and make payments in the prescribed currency mandated by the country authorized or authorities for the resident supplier. and save costs by making payment in the most stable currency and avoiding losses due to currency rate fluctuations. Conversion rates, in addition to cross-currency rates, other conversion rate can be applied also when invoices and payment have different currency. The conversion rate, again, there is invoice conversion rate, cross-currency conversion rate, payment conversion rate. For the invoice conversion rate is convert invoice currency to ledger currency. What cross-currency conversion rate? Convert invoice currency to the payment currency. What payment conversion rate? Convert payment currency to the ledger currency. It's like so again, cross-currency means you have at least 3 currency: primary ledger currency, invoice currency, payment currency. So the invoice currency conversion rate is between invoice currency and the ledger currency. At the same time, for the payment conversion rate, it's between the payment currency and the ledger currency. Cross currency means between invoice currency and the payment currency. As you see here, for example, starting transaction in 100 GBP, this is the invoice. So first of saying this is from currency of the invoice to currency of the primary ledger. Conversion rate this, so converted will be this multiply this. The cross currency means between convert invoice currency to the payment currency. Here again invoice amount is 100 GBP. Cross currency, so GBP to euro is 100, 205, so 125 euro, because euro is the payment currency. The payment from euro to USD, this is payment conversion rate, to convert the payment amount to USD or primary ledger amount. This is the difference between these 3 rates. For create cross-currency payments, during create the payments, there is one advanced tab. You will find conversion rate type and cross-currency rate type. This cross-currency rate type you can also using the user rate type to allow or to give the user the responsibility to enter the rate instead of corporate, instead of spot, fixed, blah blah blah. Also you have the option to give the users to enter it during entering or register the transaction. As you see here, payment conversion rate type and cross currency, you can use in cross currency rate type user rate also. How cross-currency payments are counted? Cross-currency payments are payment in a currency different from currency of the invoice. The accounting process record entries for cross-currency payment in both invoice currency and the payment currency. You can account for cross-currency payment individually or through the create account. As you know that during making the transaction, either invoice or AP payment, you have the option to create accounting for only this invoice separately or this payment separately, or you can by the end of the month or day, whatever, you can run create accounting process to create accounting for all of the transactions which is still not unaccounted, and also you can make a schedule process to run it one time per day, one time per week, and so on, and a lot of options to schedule this create accounting. For example, that this table show, for example, we have invoice amount in and currency 100 GBP, payment currency in euro, primary ledger currency in USD. Again, invoice conversion rate GBP to USD, payment conversion rate from euro to USD. So these two from invoice to ledger, from payment to ledger. Last one from invoice currency to payment currency. How cross currency payment are accounted? Again, this invoice in 100 GBP, cross currency rate this, payment amount in euro, it will be like this, Payment conversion rate this, so the payment amount in ledger currency equal this. Again, as you see here, invoice liability accounted in USD because here 175, and for the payment 100 GBP as a liability. Cash clearing in euro because this is the payment currency. If you see here the loss, this is the loss between liability and of invoice and liability of payment 6.25, and again the balance in euro 125, and again the balance in GBP like 100. This is as an example of how cross currency payment are accounted. This is accounted depends on the rate between the invoice currency, ledger currency, between payment currency and ledger currency, and between payment currency and invoice currency. How missing conversion rate? What's the meaning of the missing? That apply missing conversion rate process automatically applies conversion rate to the foreign currency invoices or payment that have no conversion rate and conversion rate type other than user. For example, if you have transaction with corporate or with spot or with fixed, not with a user conversion rate, and during that I didn't define the rate of this corporate in this month, so there will be no conversion rate for these transactions. So how to apply after that? You found that the corporate of this rate between these two currencies is not defined, so you can keep the invoice and the payment and just go to GL to define the rates at the corporate, spot, fixed, whatever between these two currencies, and again come to run missing conversion rate like this one. And this also, before I show you the missing conversion rate, this invoices validation will be applies as a no rate hold reason until you define this missing conversion rate in GL, and again run this missing to remove the no rate hold, and you can after that make validate, create, blah blah blah. Again here you have to run, I will show it during any schedule. There is one apply missing conversion rate. This from schedule process from tools you can run it to apply it when the required conversion rate enter option for manage common options for payables. The apply missing conversion rate use conversion rate information from manage daily rate page to apply conversion rate. The next time you validate after you complete or after this complete successfully, next time when you try to validate, the no rate hold is automatically removed, because at that time the system will trigger that the rate now defined, it will be make validate and accounted, because there are two accounting, one is entered the currency and one is accounted currency. This is how to run or how to apply missing conversion. No need to cancel the invoice, no need to cancel the payment. It's keep it and just go to complete your definition of the conversion rate, and again run this apply missing conversion rate. How foreign currency transactions are processed? This is for module of the receivable. Again, when you enter a receipt or transaction that isn't in a ledger currency, use the available window to enter conversion rate. You can use personalization to display inverse conversion rate field. The inverse conversion rate field determines the calculations of the ledger currency amount. We discussed about this before, that if this field is not displayed, you can customize like sandbox or whatever to show this field in the form of AR transactions. Enter conversion rate. There are conversion date. This is a date that applies to conversion rate for the foreign currency. Conversion type, as we know, corporate, spot, user, fixed, blah blah blah. And if you select the conversion rate type of corporate or spot, receivable verifies that a rate exists. and you cannot update the conversion rate. Receivable doesn't validate rates for the user conversion type, because user means the user will enter the rate during create or register transactions. As you see here, for create receipts, if you enter a different currency, different than ledger or whatever, it will give you this option like calculator. Just click on it. It will give you to edit conversion rate. Here, if you define a corporate, whatever, you just enter whatever the corporate and the date, and this is from this to this. This is receipt currency to ledger currency. So once you define or enter any currency different than ledger currency, this option as a calculator will be displayed. To click on it and enter conversion rate details. How the ledger currency amount is calculated? Again, the ledger currency amount is calculated in these two ways. If the inverse conversion rate field isn't displayed, so the ledger currency amount is calculated foreign currency multiply rate. If inverse conversion rate field is displayed, so the ledger currency is foreign currency multiply rate. You can change the conversion type and the date, conversion rate of foreign currency receipts, even if it's transferred to general ledger. You cannot adjust conversion rate for a foreign currency transaction on a completed invoice. You can alternatively incomplete invoice, adjust conversion rate, and again complete it. If you cannot complete the invoice, either because the invoice is paid or posted or printed or has had a receipt applied against it, you can reverse transaction, delete it, credit it, change the transaction type to one that has open receivable and post to GL options, set to no, then recreate transactions. Again, during create a journal in batch, you will find inverse conversion rate in GL responsibility. How cross-currency receipts are processed? Before we have a cross-currency payment, now we have also cross-currency receipts. Use cross-currency receipts applied to process payments that customers makes in a currency different from currency of the open debit item. You can apply cross-currency receipt to invoice, debit memo, and the chargeback. When you apply cross-currency, receivables calculate the open balance on the transaction, if any, and foreign exchange gain or loss for the application. You can apply receipts to the transaction using any currency defined in general ledger. It means from the beginning in the GL, these currencies must be defined, must be enabled, blah blah blah. But if this currency is not defined or not enabled, you cannot create the receipts in that currency. Realized gain and loss account define this account at the receivable system option level to account for conversion rate gain or loss in the ledger currency resulting from cross-currency receipt applications, and cross-currency rate types. Enter the default conversion also at the receivable system option to use when the receipt and the transaction currency are different. Cross-currency rounding account, you can define this account also at receivable system options to record any rounding error amount created during cross-currency receipt applications for currencies that have a fixed rate relationship. Enter the currency balancing account. This is in GL. You can define and enter the currency this in GL for journal entries created by cross-currency receipt application. You define the intercurrency balancing account in the journal processing balancing sections of the specify ledger option page for the applicable ledger. To define specify ledger options, there is one field for enter the currency balancing account. You can define it there to manage or for journal entries created by cross-currency receipt applications. For each cross-currency receipt applications, general ledger create an entry in the entered currency balancing account so that each journal entry balances in the entered currency. as you see here, for the edit system options in receivable system options, you can find accounting to enter release, the loss gain, cross currency rate type, cross currency rounding account for any error during make the cross currency, and this is cross currency rate type to use it during make a receipt in a currency different than currency of the transactions. Again, you can use also user rate for cross currency rate type during create the AR receipts. Here also enter the currency balancing account for specified ledger options. You can find during in general processing there is one entered currency balancing account. How cross-currency receipts are calculated? When apply cross-currency receipt, your customers need to provide the remittance information that which transactions you are going to apply this receipt to these transactions. If the receipt is partially payment, how much of transaction is to be settled. If applicable, conversion rate information, which is conversion rate to use to convert ledger currency. If you are manually entering allocated receipt amount, how much of the receipts to allocate to transactions, because in some cases the customers tell you that I am going to apply, if the receipt amount for example 1000, but I will apply 500 only of this receipt amount as a partially applied to this transaction. So you have to know which transactions, and is it partially applying or full, or the customers needs to apply these receipts for more than one transactions, and all of these cases. You have to enter the amount to apply to in the applied amount field. If conversion rate exists between receipt currency and transaction currency, receivables populate cross currency rate fields and calculate the allocated receipt amount. If conversion rate doesn't exist between receipt currency and the transaction currency, then either enter the rate to use to convert it to transaction amount to receipt amount in the cross currency rate field, or enter the amount of the receipt to allocate to the transaction to in the allocated receipt amount field. Because again, if you didn't define any corporate or fixed or spot or whatever, you can choose the conversion type as a users. Once you select the users, the system will ask you please enter the rate between these two currencies, currency of transaction, currency of receipt. Receivable perform these calculations. Once convert the amount applied to the ledger currency and display this amount where in the amount applied based, because again we have receipt currency, transaction currency, ledger currency. So receivables will convert the amount applied to the ledger currency and display in amount applied based field. Update the balance due in both transaction currency as a balance due and the ledger currency balance due based. So this field as a balance due for the transaction currency, balance due base field for ledger currency. Calculate cross currency conversion. Again, receivable use the receipts date as conversion date, and receivable system option cross currency rate type to calculate the rate as we discussed before. If you enter conversion rate in a cross currency rate field, the receivable calculates allocated receipt amount. If you enter the allocated receipt amount, receivable what it will calculate cross currency rate. Calculate the foreign currency exchange gain or loss. That receivable determines the transaction amount and the receipt amount in the ledger currency, and receivable calculates the foreign currency exchange gain or loss in ledger currency using this formula: receipt amount as of receipt date minus transaction amount as of transaction date equal foreign exchange gain or loss. So how the system calculate gain or loss of this foreign currency exchange? It will using receipt amount as of the receipt date. For example, I make a transaction in 1st of January with this currency or with this amount. I make the receipts in 1st of March or April. So the receipt amount of these receipts in April minus the transaction amount for the 1st of January equal foreign exchange gain or loss. Again, what is the difference between conversion rate gain or loss distributions and realized gain or loss distribution. Conversion rate gain or loss distribution record the rate variance between or for inventory or expense items that occur at receipts. The invoice validation process calculate variance between invoice and either PO or receipts depending on how invoice was matched. For realized gain or loss distributions, record the rate variance between invoice entry and the payment time. So again, conversion rate, this is between the PO or receipts and the invoice, which is matched. Realized gain or loss distribution, record rate variance between invoice entry and the payment time. The gain or loss calculation is based on the account for payment options on the manage invoice payment option page, as well as prepayment application. For example, I am going to make invoice, for example, with USD in rate 3.4. When I make the payment, the rate changes to 5. So it will record rate variances. This is for realized gain or loss distributions. Realized gain or loss is always calculated for foreign currency prepayment application time. And I hope now to got the overview of currency, rates type, conversion rate type, how to upload it, what is the duties privilege, what is the cross currency payment. And again, it's like a concept, because all of us, we have a lot of scenarios for this part, how to make a transaction, how the system will calculate. So before you make it, you have to first aware about the concept, aware about the definitions, aware about what is the differences between all of these. Once you got the concept, once you got the knowledge, once you got the differences, it will be easy to manage your transaction. Thanks for watching.